Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, consider subscribing. If you haven't yet already, give me a thumbs up. It really helps out the channel, pushes YouTube algorithm to spread my videos to more and more people. I have over 7,000 subscribers, so I thank each and every one of you. Check out my link in the description below for free stocks with Webull. With Cash App, you get free stocks, I get free stocks. Really appreciate it. Thank you very much. Let's get started. Today, we're talking about a new stock, a new SPAC stock that is merging with a company. So I let my members know, my YouTube members, as well as my Patreon supporters know today, earlier this morning, about this company, and now I'm dropping a video about it. So here's my post to my members. So the stock is INAQ is the ticker symbol, and when I posted this in the morning, it was up about 12%, but it ended the day at roughly more than 20% on the day. So it was $12.55 when I did this post. And you see at the end of the day, it closed at $13.49 for a 20% gain on today. So this is the warrants though. This is the warrants that was up 40.32% on the day, closed at $3.55. So I'll just disclose that I bought warrants in this company. I did not buy the stock, and I'll further explain that. Well, I'll just explain right now. So I bought warrants in this company because I'm not fully convinced about the business model. I think there is good potential, and you can see by today's performance, the warrants are up 40%, the stock up 20%. So there is potential, there is hype behind it, and there's some big names behind it. And so I think this could lead into bigger hype moving into the next few weeks or the next few months. But I am not fully convinced about the company, so that is why for now I am only investing in warrants. So the reason for warrants is, first of all, I'm investing only in my retirement account. So if there are gains, I could just take the gains right away and not have to worry about taxes. So that's one aspect of it. The other aspect is I'm only purchasing warrants because for now I don't see this as a long-term play. When I have something as a long-term play, I would usually invest in warrants as well as the common shares. But for right now, I'm only doing warrants because I don't see this as a long-term play for me as of today. I need to do more research into this, but for now, my brief superficial research is that this is going to be a short-term play for me. Also, warrants are cheaper, and I could get more warrants. And when the warrants run up, I know that's just it just makes a bigger gain in a short amount of time. So let's get started. METROMILE, a leading digital insurance platform to become a public company. Transaction includes a commitment of $160 million PIPE led by Social Capital, which is Chamath Polyhypatia's company, and Mark Cuban is the other big name. So Chamath and Mark Cuban are very, very well known, not just in the venture capital arena in Silicon Valley, but just in general in public. Mark Cuban from Shark Tank, and as well as from the Dallas Mavericks. So very kind of popular names behind it, and big investors. So I think they are propelling the stock, and that's why it's probably up just from the names behind it. That's probably why it was up 20% on the commons and 40% on the warrants. All right, moving along, METROMILE expanding to 49 states by the year end of 2022, projecting a $1 billion of premium run rate by end of 2024. Approximately 1.3 billion combined company pro forma implied market cap. $294 million in cash to pursue growth, and they're going to get approximately $294 million in cash to pursue growth initiatives. So the insurance space, whether it's auto insurance, home insurance, life insurance, it's just a space that is ripe for innovation, for complete disruption, and we're really seeing this with the likes of like Lemonade, that was really, really popular this year. And like Root Auto Insurance, also now with METROMILE. So a little twist on insurance. So they are an insurance company that is really a lot more digital, and they get a lot more data in order to provide the rates, as well as they are charging users by the mile. So if you don't drive a lot, then you could pay a lot less of insurance, because if your car is sitting 80% of the time and you don't drive that much, why are you going to pay the same premium of somebody that drives every day or like hundreds of miles a day? So it just makes sense to pay less if you drive less. So auto insurance personalized for low mileage drivers. About two-thirds, so according to them, about two-thirds of U.S. drivers are considered low mileage and could potentially be overpaying for auto insurance. Metromile's insurance customers save roughly 47% on average. Metromile's fully digital customer experience is designed for the modern driver. Customers sign up, access customer support, and file claims through its mobile app. Claims are handled quickly and in most cases are fully automated. So that sounds like another very popular company that went public just recently, Lemonade. They are doing kind of the same thing, but they're only doing for like rentals insurance, homeowners insurance, and for pet insurance. They're not in the auto insurance space as of yet. And as well as Metromile is really, really popular with millennials, everyone that just wants to get everything done by app. On their phone, and they have AI just doing the claims. So a majority of the claims are handled by artificial intelligence, and they're paid out very, very quickly. So this is a comment by Chamath Palihipatia. Metromile's technology sets them apart, driving huge advantages that will deliver significant and profitable growth for decades to come. I expect them to be a generational business. So obviously Chamath is very, very bullish on it, thinking that this could be a generational business. Right now, I've been looking at this company kind of today, just for one day. So very superficial due diligence for me. I just want to put out a video. This is like a brief overview of what I am thinking right now. And I just don't see it right now as a generational business. A generational business is something like Tesla that's going to disrupt multiple industries and be around, still disrupting for decades. I just don't see this right now for this company. Maybe I'm missing something. But for right now, like I said, I think it's a good swing trade or a good short-term trade or short-term investment for me. But as far as long-term, I don't see it right now. All right, this is what Mark Cuban has to say. I've been a fan of Metromile's team and amazing product. During these times of financial hardship, unemployment, and work from home, Metromile provides an important insurance alternative. The option to pay for insurance by the mile is a game changer, and why I'm incredibly excited by Metromile's future, said entrepreneur Mark Cuban. 76% average annual premium growth rate from 2015 to 2019. They say they have proprietary technology and data that creates a barrier to entry. And so, this is where I have a little bit of issue. I don't see this as being an incredibly strong moat. I don't see why, Esurance, Allstate, Farmers can't just do the same thing that they're doing, just switch a business model or provide a separate business model for people that want it to pay by the mile. Allstate already has, the app on the phone. They used to have the little thing that you plug into your car that kind of keeps track of your speed and mileage and whatnot. I don't see why they can't just switch over and provide people that want it to pay by the mile. I just don't see the moat that Metromile has, that a big insurance company can't just come over and do the same thing. So that's where I have a very, very big problem with this business model. But with that said, startup companies like this, Metromile, and like Lemonade, they move very quickly, and they move so quick, and they get a huge market share so fast that big dinosaurs like Allstate and Farmers Insurance, they really can't catch up. And by the time that they do catch up, the customers are already very, very happy with Lemonade or with Metromile. So that's the only thing that I do see is they move fast, and they understand the millennials, they understand this Gen Z, Gen X generation, and they could capture that market share very, very fast. But as far as a moat, it's hard to see right now. But I do see the value proposition for getting this market share very fast, because they are a fast-moving, very, very young startup company. All right, moving on, they said average customers save 47% from their previous auto insurance, approximately 3 billion miles driven of driving data collected. So that is one thing that I do say is important. So that's probably how they're also able to offer their insurance at a lower rate, because they have so much data. Obviously, with the more data that they have and real, it's like real live driving data, that they're collecting from the vehicles, that is how they can provide cheaper insurance, because they really understand how people drive, and therefore, people are at less risk, and therefore they can lower the premiums. So another company that's doing this, getting all that data and providing auto insurance with it, is, of course, Right there, Tesla. Look, Tesla is doing this, Tesla Auto Insurance. So they are doing this in California, and they're hoping to expand this out throughout the country. And so that is another reason why I am not that bullish on METROMILE, because I see Tesla taking a huge market share of the auto insurance business. So, where does that leave companies like METROMILE? It could hamper their growth, and they're expected to expand to, I think, 49 states. I said by the end of 2024. So it could hamper their growth if Tesla Insurance really ramps up. So they're poised to grow, scale rapidly nationwide. They have 21 state footprint. They're expecting to have 21 state footprint by the end of 2021. And sorry, my mistake. Earlier I said 2024, but actually 49 states by the end of 2022. They're expected to achieve $1 billion of insurance premium run rate by 2024. And so that is where, by 2024, if Tesla is really ramping up their auto insurance and they come out nationwide with Tesla Insurance, that is going to be, like I said, is probably going to be a damper on their projected $1 billion premium by 2024. So, obviously they're going to be more bullish, but I'm looking at it from multiple views, and so I am not as bullish as they are. So just a brief overview of how this works. METROMILE, they have a very monthly rate. For instance, it's like $29 for their monthly rate, and then it's just about how many miles you drive. And so you see this example is $56 a month. And just like all auto insurance, it really depends on your age and where you're driving, or what city, what state you're driving in. But you get the idea. There's a base rate, and then everything else is calculated by how much you actually drive, how much miles you actually drive. So right now it's only offered in these states, and Texas is not one of them. So I'm in Texas, so I wasn't able to get on and just compare the rates of what I have now versus what METROMILE could provide me. So maybe if one of you guys are watching and you live in one of these states that offer METROMILE, you could probably log in and just see how much cheaper your insurance would be. Leave a comment in the description below. Let me know. I would like to read it. I'm sure a lot of other viewers will be interested as well. All right, so like I said, I did buy into this, and I only bought warrants, and very, very small position. I only bought 100 shares, 100 warrants. I got filled at $2.85, and the warrants did close today at $3.55. So for the day, it was up 40%. And so for me personally, I'm just up a little over 20% on these warrants that I bought today. All right, guys, so that's my video. That's my superficial opinions right now about METROMILE. I didn't look too much deeper into this, but I will be looking more into this and doing a follow-up video. But for now, I think it's a short-term play. Like I said, it was up 40% today. So anybody that got in today, you got some pretty decent gains if you've got warrants. If you got the commons, it was up 20%. So a very good short-term play. I don't see this as a long-term play for me right now, but maybe in the future it will be more interesting, or I will find more information to kind of support why this is a generational company. But for now, I don't see it as a generational company. I see it as like a short-term play, and so far it's paid off. I'm up nearly 20% on the day. Guys, let me know if you like my video. Give me a thumbs up, really helps out the channel. Let me know your opinion about METROMILE. Are you interested in this for a long-term or short-term? Have you gotten into it? Let me know. Leave a comment in the description below. Have an awesome Thanksgiving. Have an awesome weekend. Be safe. Catch you in the next one. Peace.